Good evening, everybody. What is going on? We have Dr. Roy with us. Congratulations, Roy.
Thanks, Steve. That means a lot. Yeah. As I was saying before, just glad to be done. Glad to be here. Feels like a weight is lifted off my shoulders. So it's a great time. And actually, Thursday was so violently red with the market. I'm like, hey, it's nice to have something else that takes my full attention. How are you,
Well,
Steve?
before before we get going, read the disclaimer. We are not financial advisors. We have no idea what your situation is. Please take everything we say with a grain of salt. Do your own due diligence. Make your own decisions. This is for educational and entertainment purposes only. I'm a little worried because this estate tax that they're talking about is really annoying, man. I just wrote a 1,000-word post. I'm a little reluctant to post it on X, actually.
Yeah, you'll probably get flamed for it.
I don't care about that. It's just, and I've written it in the most unpolitical way. At some point, this needs to stop. I am worried for New York, but it is what it is.
Yeah. And that's happening, a lot of different places too. So, like, the tough thing is, depending on there's several different laws, several different states that are considering similar things. Um, if somebody wants to move up from the middle class, those sort of hurdles make it a lot more challenging. Um, it's not fun. Oh, saying news on VG.
We don't know if Tevis is coming or not.
He's not coming. Yeah, he's
He's
still.
not. Okay.
He just. I asked him right after our stream, or actually right at the end, and they said he can't. No, he's 3 hours earlier because he's in Argentina, I believe. So it's what time would it be? 11 o'clock at night. So
Okay.
but I'm here, and we're going to be discussing tonight, guys. SoFi is the main topic.
Yeah.
Yeah, the VG. I think that the person that mentioning that was actually kind of funny. So we had our earlier Ron and Travis show, the Fiesta Fridays, and like every other question was on LG and VG, and it's like the one thing that's been holding up my portfolio, especially this week. But yeah, the news was them successfully completing the final investment decision for CP2. So that's another nice check mark for them. Couldn't have happened at a better time either. And it'll take a while for that facility to come fully online, but that's a great thing.
So, SoFi, a lot of people in the community like it. It's a community favorite. We've both been discussing it for a long time, and we are both long-term shareholders of SoFi. The community seems to be torn. There's a lot of people discussing it, and look, it's seen better days. The business is doing incredible from a business standpoint, firing on all cylinders, and it's the best metrics it's ever had. Yet, share price has gone from just over 30 down to about 17 and a half or so.
Yeah. Yeah, it's been tough. But like you said, this is one of those moments where there's a extreme disconnect, which could persist for a while, and it could get worse between the stock and the company. So I see silly things where people are like, it looks like SoFi is the next PayPal. It's like, no, they're accelerating. Growth is accelerating. Now, are there legitimate concerns both in the macro and a little bit on what SoFi does as well? Yes, yeah, it's not purely for nothing, and the market's completely wrong here to be selling it off. But I think to this level, it is. I think it's oversold. I think it's overdone. But this can persist for a while. So the two things, I guess, Steve, and maybe there's some other things that stick out in your mind that seem to be a hangover for the stock is first, I mean, like similar names are getting hit, right? These are high beta, high growth names, especially in the financial services and fintech side. There's been some concerns on the AI front, not as impactful for SoFi, but that have hit other names that are in the space. And really for SoFi, I think what's hitting them right now is the two things. So first, private equity. We've talked about that a little bit. We can talk about it again here tonight. Blue Owl certainly was one of those that a lot of people had concerns with. We saw that even have ripple effects in the AI space with the CoreWeave funding that's coming from Blue Owl with private equity. It's a $1.5 trillion space. So it is large. And of course, the private equity is what helps fund the loan platform business. So it's not as if none of that impacts SoFi. And then the other, of course, is the impact from energy prices and what's happening with the Strait of Hormuz on inflation. And so pretty much we're at this place where fewer rate cuts than we initially anticipated, than even SoFi guided for, are the consensus right now. And so fewer rate cuts doesn't kill the bull thesis or anything like that, but it does have an impact that's material on SoFi. So I guess, Steve, I'll throw it back to you. Like, maybe you see something else out there that's weighing on this, or do you have any thoughts on either of those two?
Yeah, I mean, SoFi was in a rut before the crisis overseas happened. So this is clearly has nothing to do with what has happened in the past week. This was already on a slippery slope going. And I think it is more evident than ever. This is being, for better or worse, right or wrong, classified as a bank. This is being looked at as a bank. The market does not care about the growth rates. The market does not care about the potential revenue from the tech platform. They are looking at this as being a financial institution, generating their capital from lending, from financial services, and it's not getting the multiple that a traditional fintech or a technology company would. It is getting a rich multiple of a bank, because when you put it up against at least the 18 banks I put it up against, it has the largest multiple on tangible book value, and it has the largest multiple on earnings. Now, I think that they need to do something to really change the narrative here.
Yeah, I agree. So we probably did agree on that. I mean, like, obviously we do. Noto, of course, buying back was good, very good. I think that there will probably be a second buy maybe this next week, but obviously that wasn't enough to change things. S&P 500, they didn't get in. So I guess my question for you, Steve, and I also have thoughts on this too. What is something that they can control, that they can do to change the narrative? Because obviously there are things that are external to SoFi, which would change the narrative, but what can they actually control here?
I mean, it's hard to control the market narrative. They need to play up a lot of different things, and they got to play to their strengths. Their strengths are revenue growth. Their strengths are earnings growth. Their strengths are EBITDA growth. Their strengths are a growing customer base. They need to play this up. They also, in my opinion, need to talk about why they are not just any ordinary financial institution. They need to talk about the great wealth transfer. They need to talk about how they can deploy different tools and different products quicker than their competitors. They need to have an all-out assault on messaging. I'm not seeing that out of SoFi. When I see Robinhood, and I'm not a shareholder of Robinhood, okay? After meeting Vlad, I almost became a shareholder. I didn't. My allegiance is still with SoFi right now, but I call balls and strikes. Their messaging is nothing like Robinhood's, and I think that that's a big problem. I also think it's a big problem that they're not talking about the RFPs. They're not talking about the potential of the tech platform. They're not talking about the potential of powering their competitors and generating incremental revenue that increases every year at escalations. So there's a lot of messaging that I think they need to do better on.
Yeah, I mean, like, we've held that and thought that in common for a while, and I think that they have improved. I think them taking Chris Hager, data-driven investing, on the team has certainly helped. You can see some of the communications they have. I don't think the tech platform talk is going to do it here at this point. I don't think that the market will see it or believe it until they actually see it. And while they are onboarding some pretty incredible clients this year, there's still we saw, of course, Chime exit. That was why the tech platform bumped meaningfully from the revenue this last quarter. So I don't think that'll do it. The one thing that I do think that they could do, and actually I got this idea, it's not like groundbreaking or anything, but let me just share this if you can throw this up.
Yep.
Figure is a sister company of SoFi. Mike Cagney, sorry, is the CEO, also the founder of SoFi too. They do very different things. So they will eventually compete on a number of things, but multiple winners in this space. I'm invested in both. My position for SoFi is a lot larger. But they went on Cantor Fitzgerald at one of these fireside chats, and they talked about a lot of different things, which was nice. In SoFi, Chris Lapointe oftentimes, like, he kills in these type of meetings. Noto does just fine as well. But this right here was the piece, and they were asked about that immediately by the analysts of, okay, what about this private equity stress? What about specifically they do have some loans that are backed by crypto. And so they talked about that. And so they went in detail as far as on each of these, like why they were not really at risk, why it wasn't even weighing on Figure in this point with the private equity stress. And SoFi, like the way that they both, I guess one thing that I don't know is they did comment on this back in earnings, but they've not commented since then, is there any change in the way that these agreements with the Blue Owls and the Fortress of the world are going? Like, are they pulling back and being a little bit more cautious? If they're not, it would be great to hear, like, hey, nothing has changed. Like, just like that they said in the earnings call, they're like, this is a different loan bucket. This is a different loan category. It shouldn't be impacted by this. And then just reiterating, like, hey, no matter what really happens there, like at the end of the day, if you look at the FICO scores, for instance, and also not just the FICO scores, but the loan vintages as well, they're going to be one of the last financiers in the market that are hit in the case of some large credit concern, whether it's a private equity type of thing or even on the consumer level. So I think just reiterating that and showing like and explaining what's going on, that would be helpful. Now, I don't think that changes everything, because a lot of what weighs over at SoFi is out of their control. It's just macro stuff right now. But as a long-term investor, like, I'm not really concerned. Like, this price right here feels very cheap for me. I added shares on the way down at a higher level than this in the swing bucket category. So I will take profits at some point. Has to go up to take profits, though, right?
So I agree with what you said. And I think it would be very important for Noto to come out and discuss the Blue Owl deal, discuss the Fortress deal, and show the slide from the earnings deck and say, listen, everybody had a problem 2 years ago with this. They said we couldn't sell loans. We just sold them at 106.5%. As of right now, on the last earnings calls, Blue Owl did not say anything about this slowing down. In fact, we only saw loans get purchased at a quicker pace from SoFi. The reason Blue Owl is down 50% has nothing to do with the loan book from SoFi. It has everything to do with the way that private equity companies work. And if you want to go in a step further, the business development corporations, BDCs that they also have affiliations with and run, they tend to invest in lower to middle market companies and also larger companies that are all privately held. Now, a lot of smaller and middle market companies that they're investing in are software companies. They're technology companies. We have had an entire reign of chaos on software. And the ones that don't have the balance sheets and the cash flow are smaller to middle market or lower to middle market, whatever you want to call it. And the idea is that they are cannibalizing their own investments with their investments in data centers. The problem is that as illiquid assets on the private market, they cannot just dump shares for fair market value. They have to go find a buyer. If there are not people willing to buy at the current price, they may have to take a haircut to get out of that position. And people are freaking out. And it is just unbelievable that this is falling and spilling over to SoFi, because what is happening in private equity has nothing to do with SoFi's loan book. I mean, Q4 was just reported. Q4 ended 9 weeks ago, 10 weeks ago. Not much has changed.
Yeah, I mean that's the thing is like this was a great earnings. Was it the best ever? No, but it was fantastic. I do see. Let me see if I can find a credible source here. Yeah, okay, credible enough. Here we go. Some news not on SoFi. We can come back to SoFi too, but this is actually really big. Meta is planning sweeping layoffs that could affect 20% or more of the company per Reuters. That just came out. So thank you, Juku, who mentioned it in chat. We got this on top of news this week that their next large AI model has been delayed, code name Avocado. Do you own Meta, Steve, or you?
Yeah. Long-term.
What are your thoughts on the company right now? The stock.
Amazing. Absolutely amazing. Numbers are incredible. Forward growth is going to be incredible. And I got 2 words to say about the layoffs. Well, actually, I'm not going to be vulgar. So phrase it like this. Zuckerberg told everybody they would be replacing engineers over the next 12 to 24 months with AI. He said at some point, all lower to middle level engineers will be replaced. He told us that 2 or 3 earnings calls ago. This is not shocking. Morgan Stanley came out, they're doing a 2% RIF. More companies are going to continue to do this.
Yeah. And here, like unlike with Block, with Jack Dorsey announcing 40% of the company being 40% of the company being laid off over the next couple of years, and he blames it on AI. Like that was just gross incompetence at the top for Jack. For the most part, like maybe there's a little bit of truth, but he's just looking for a scapegoat. And honestly, a lot of CEOs do that, where they're like, okay, rather than blame myself, because I'm not going to do that, let me blame the macro or something that's happening in the macro. But with this, I would need to look more into it. We need more details as well, what this actually looks like. And could doesn't mean will. Again, this is a rumor too at this point, but it seems like that there is definitely some smoke here for sure. It does feel like that this could be more because of AI and AI efficiency, even if their own internal models are lagging. So, but also shows, I think, that his focus has remained unchanged. That a lot of people thought maybe Zuck would taco, as he did with the metaverse previously, when there was heavy criticism with the CapEx spend there. I think he views as bullish he's on metaverse, and he changed the name of the company to Meta. I mean, like the guy is still focused and bullish on the metaverse, but even more so, like he views AI as even something more. Of course, something that does impact the metaverse dream too. So they're obviously not slowing down what they're seeing. They're like, hey, we have to go this direction. We have no choice. So I feel for those that are impacted by the layoffs. I have no position in Meta. It is something to keep an eye on, though. Like my fear is there will be a lot of companies that follow suit and blame AI. And unlike Meta, I think most companies, they're just using it as an excuse.
Look, nobody wants layoffs. Nobody wants to see people lose jobs. It's an unfortunate cycle in the business world. Layoffs are nothing new. They have continuously happened. Unfortunately, this time around, it may be at a much quicker rate, and it may become increasingly harder to find new work. The age of AI and robotics is a completely different playbook that has not been written yet. And we just don't know what that script is going to be. So I don't know. From being a shareholder in Meta, take the layoffs out of it, I think that it's going to be a much bigger company in the future from a revenue and earnings standpoint.
Yeah. All right. So back on SoFi. Well, I guess first, I hope that there's no layoffs that impact SoFi. There shouldn't be. Look at the way that the business is growing. And they're pretty efficient with their use of employees as well. Is there anything else that you see how they can shift this narrative beyond just simply waiting And there is a certain amount of cyclicality with financial companies, with fintechs as well. Or are they just basically waiting? And on that, Steve, can big business banking be something that actually shifts the market
Yes.
before then?
Yes. I don't know why they haven't done it already. They should have done it last year.
Well, they've talked about it. It's coming.
Yeah. And it's not just big business banking. My opinion, okay, when you have a retirement account at work, 401k plan, let's say it's with Vanguard, you're paying every quarter some type of asset management fee for all their services. You can't get out of that. Your company negotiates that. SoFi should be in the business of small, middle, and large banking. They should also be in the business of being a custodian of assets for retirement accounts. Because who better to be the custodian of your corporate assets from retirement accounts other than the financial institution that is already the custodian of your actual assets? SoFi wins two ways here. Not only do they get an asset management fee every quarter from everybody that is a plan participant, they also can add in the lineup of 15, 20, 25 funds, whatever it is, one or two SoFi mutual funds, and give it as an option to their clients, charge them a little bit less on that asset management fee in order to have those be an option in their retirement plans and gain more assets under management. When they gain more assets under management, two things happen. They get to charge for the actual fund administration, and then they actually get to charge for the retirement plan administration.
Yeah.
So it never made sense to me why they have not done this yet. This should have been tier one, hands on deck, get it done. I don't get it.
Yeah, I think part of it was up to the end of last year that they were moving things internally onto their tech stack that they acquired through Technisys and Galileo that completed it late last year. We've seen Cadence improve some. Part of it too, I think, is culture. Like, I think they have some very good employees, but like to build out crypto, to really focus on what's happening with the loan platform business, to focus on what's happening with SoFi at work, with the Trump Invest America accounts, focus on the remittance and the payment thing all at once is tough for a business to do competently and well, all at the same time, and then add other things on top of that. SoFi, I don't think, is capable of doing that with excellence across the board. And I think Noto realizes that, and it's like, okay, let's concentrate on those that are the most accretive, most beneficial, most timely opportunities. And I think that they're doing that. There are companies out there like Robinhood, like we talked Robinhood, and they've already done, and I think SoFi will follow here shortly. They did not have custodial accounts until they announced it at this in-flight event. And it wasn't a surprise just because we saw Vlad all over the Trump accounts, Anthony Noto as well. It was on the committee there. So SoFi is not going to be left out. They'll benefit from the Invest America accounts. But with that, it's not much of a leap from the Invest America accounts. It's a form of custodial accounts to just offering broader custodial accounts. Like, that's inevitable. That's likely coming soon. It should be announced soon, you would think, but maybe they're waiting for something. I don't know. If we don't see it this year, it's like, okay, there's problems. But I would be pretty surprised if we don't even see it in the next month or two. So
I don't know what's going to happen with SoFi. I do believe it'll be higher in the future. I do believe this is going to be a great year for SoFi. And I do believe the team is doing a great job. And I know I can't get everything I want. I know that they can only do so much in a quarter. I know from the way Noto has discussed things, and if you go back and you really study him, I know he's got the playbook. I know it's on the roadmap. for me, and I'm not running the company, so I'm not saying I know better. I'm sure there are different reasons why they did other things first. To me, it's a top priority. Maybe it's not in the grand scheme of things as prosperous as some of the other things that they are doing. I'm interested. I would like to see it broken out. How much is options revenue going to generate in the next several quarters?
Yeah.
How much is
Yeah,
crypto really going to generate? I want to see
they
that.
don't do that. Well, crypto is a little bit early probably to read too much on it. And I'm glad that they gave us an early read on some of that. But like, just like for one thing that I think will help our audience, and also fellow SoFi shareholders, if it was not for the price action, we would not be talking. I'm talking not just we and Steve, but like the financial community as a whole would not be talking about, well, they're running into this and their communication needs to improve and they need to improve the cadence. And we would be focusing on all the highlights and be like, man, look at this. The revenue is accelerating and growing by an increasing large amount, that they're going after all these exciting things that are in crypto and SoFi Pay, that we'd be talking about that SoFi USD stablecoin, which is along with the stablecoin that Figure, sister company there, offers. They are not impacted negatively at all, no matter what happens with the Clarity Act, whether it passes or not, whether it passes with that loophole closing that allows yield elsewhere. They're very well positioned on that. Big business banking, certainly the opportunity there with the custodial Trump America accounts, credit cards, the interchange fee stuff that they've been doing. Like, so many good things happening at SoFi. There are some weaker points. There are some negatives, but mostly it's just price action. This is the same company that just put out incredible numbers that got us very excited at the start of the year. So, as a long-term investor, I sleep like a baby right now holding SoFi. Like, I'm very wrong on my price target that I put out in October last year. Very wrong. Like, we would need a lot of help from the macro shifting, but also from really, really good execution. And we're probably not going to see that. I would be surprised if we're lower by the end of the year. Could we be range bound from now until then? Maybe. But I think also, the market is beat up, not just SoFi, not just fintechs and financials, but a lot of high growth names, high revenue names, and high flyers really since October. A lot of tech has been hit. And it's something that may continue to be choppy, especially with this Iran situation and maybe until midterms. It's usually a little choppy and rough until then. And if you look historically, post midterm election and giving that certainty, especially if we get gridlock, which looks like the consensus right now, markets love gridlock. They love it. They absolutely love it, especially after the massive changes that have happened really rapidly under President Trump. So, I have zero concerns here, zero concerns with SoFi. As a business, they're thriving. As a stock, boy, it's felt miserable. But
Yeah, I don't know. I sleep like a baby too, for other reasons. And SoFi is just one of them I'm not worried about. I don't know when it's going to turn. The reality about SoFi is higher oil prices doesn't really impact them. I mean, what do they really impact? Their freaking operating costs because of electricity?
Let me pull up the FedWatch part, CME Group FedWatch. 1 second.
So they are.
It does impact inflation, and because it impacts inflation, it impacts rate cuts. So that's really where it impacts.
Rate cuts are expected to be 1 now this year, potentially 2.
Yeah.
The big problem with rate cuts is now it's looking like July is going to be the first one. But I will push back a little bit because SoFi had an incredible year last year with rates at 3.5%.
Can you throw this up, Steve?
I can.
So this is what we're looking at. I can make it a little bit bigger before it starts to lose cohesion. This is end of the year, so December 9th, 2026. Rate cut probabilities. We are currently at 350 to 375. We're now at the point, and this has shifted tremendously, that almost 40% of people are saying, hey, we are not going to see any rate cuts at all. And 40 just see 1%. SoFi, Anthony Noto, when they came out in guidance, usually they're a little bit more cautious. They're like, hey, 2 rate cuts is what we're guiding for. Kind of surprised me that they didn't say 1.5. And we can see how much this has really shifted. That a month ago, 3%, not 30%, but 3% were saying no cuts. And the consensus again was between, let's see, 1, 2, 3 cuts, 2 and 3 cuts. So it just goes to show you, and it's tough for them to cut in this type of environment. They have the dual mandate between jobs, but the labor market looks okay enough, and there's a legitimate worry about inflation, and it's not just about fuel. There's helium that's factors into the AI stuff. And even more critically, there's fertilizer, which we need definitely for the wheat production and a lot of the crops that are growing in the area, which feeds a large amount of the world. So hopefully things get resolved relatively soon. But there is. I wouldn't say that this Strait of Hormuz and oil situation doesn't have an impact on SoFi. There's no direct impact, but there are secondary impacts for sure.
Oh, there's secondary and third impacts. There's no question about that. Directly, it doesn't impact them. But if this stays higher for longer with oil, certainly recession talks are going to start again. So obviously the macro can change and that would impact them. I'm just saying that right now, this quarter, they're not going to be impacted. The Q1 numbers are likely going to be great. So on a macro level, if we want to go there, oil at 98 a barrel is not good. We all know this. We need oil 55 to 65, no more than 70. 75 is like the top line you want oil, because input costs get destroyed, transportation costs get destroyed. As Roy said, fertilizer costs go up, corporate earnings contract. It is not a good recipe. When corporate earnings contract, you start seeing even more layoffs, because now you need to offset that with SG&A costs going lower. And now you start talking about unemployment going up at a time when AI and robotics are likely to have massive impacts on the labor market, and not in a good way. So did you see New York is now talking about not allowing LLMs to provide any advice that a human needs to get a professional license in. So
I didn't see that, but I mean that.
Hold on, I'll send it. I'm going to send it to myself so I can put it on the screen. I sent it to my buddy who's an accountant.
Yeah. While you're pulling that up, I did see somebody ask about what happened to the Trump and the 10% credit card limit. That was never going to be a thing. I said it at the very beginning, like there's 0% chance of that ever happening. And just because the president's like, hey, this is the way it should be, he doesn't even have the power of the pen in that case. So it's a nothing burger. But yeah, as far as like the New York thing, I did not see that. But in a state that doesn't even allow you to have yield from Ethereum and crypto, like from staking, it doesn't surprise me.
So it was on Instagram. It's actually Senate Bill S7263, which just cleared committee unanimously, would make companies liable if their AI agents give substantive advice in licensed fields like medicine, law, dentistry, psychiatry, psychology, engineering, nursing, and more, treating it as unauthorized practice. And the headline is, New York wants to ban AI from giving professional advice. I mean, this is insane. And I understand why they're doing it, but I don't know. And what one of the big arguments that they're saying is the core principle: if a human is legally required to hold a state license to give you specific professional advice, an AI is legally prohibited from providing that substantive advice. I'll push back. What if an AI can read every single law case in every single law and provide better information than the best lawyer in the country? You have to think that that's entirely possible.
Yeah.
Because they can report anything to the T within milliseconds.
Steve, I love visiting New York and getting to hang out with you, but man, I don't know why you live there. I'm
Tell me
glad you
about
like it.
it. Well, I mean, I'm sitting here and I've cut this down to 959 words and I'm still on the fence about posting it. I am so aggravated about what is being proposed. And my main reason is look, I am not a billionaire. Okay. Far from it. I am not championing or fighting for the billionaire class by any means. The reality, what they are now proposing is to reduce New York's estate tax exemption from 7.1 million down to $750,000. The median home price in New York City is $809,000. Nassau County is $820,000. Westchester County $754,000. This is insane that this is even being talked about. And the reason I'm getting so angry about this is because this could be the final nail that makes even more people leave. And these people are not thinking about the ramifications for everybody else that still lives here because the collective tax pool is just going to continue to decrease. And they've lost their minds. They've lost their minds.
Yeah. Is there anything that would cause you to actually leave New York, Steve? I think that's like the reality
Yes.
for a lot of people is they do not want to leave.
Yes.
They're willing to suffer more pain. And while they are, like, this sort of thing will probably sadly continue.
I mean, at some point, the last straw is going to break. I don't know if I'm there yet. And it's not just my decision. If it was just my decision, it would be different. But it's not. Like, I have other things I have to think about.
Do you guys still have you can't own drinks over a certain size or they're taxed or something? I can't remember what that was, but
What do you mean?
there was I thought it was in New York that limited even the size of soda you could get in a convenience station. Like, I hate that sort of stuff.
When Bloomberg, he did a whole sugar thing and all
That's
that
what it was.
stuff.
Yeah.
Absolutely. Yeah, he did that.
Yeah. Not for me, man. I love Texas too much. We have our own problems here too, but yeah, there's no perfect place. And I'm glad that you're happy where you're at, but yeah, things could get worse.
All right,
what else did you want to?
I'm posting this on X. I don't care who dislikes me or unfollows me. It's not political. It's straight economics. I'm posting it. Screw it.
All right.
I can't believe I'm going to do this.
You normally don't talk about the political stuff, so
maybe I should take 3 minutes and read it, and you let me know now that you have a doctorate.
So why don't you do it live and show it, or just read it, and then we'll put up a poll. Although I'm pretty sure the poll, even if it's not the best thing for you to post,
tell me to post it anyway.
They'll tell you to post it no matter what, especially if it's spicy.
It is. Oh, it's not nearly as much as it was. It's now a third of what it was. Like I spent 3 hours writing this, pretty much with the research I did. I went to the IRS website. Like I spent a lot of time doing a lot of research, and I took all of it out because I tried to make this as non-political as possible. But all right, here we go. As a lifelong tax-paying New Yorker, I am extremely worried about the ramifications of the estate tax proposal on New Yorkers if it gets signed into law. I want to be clear up front. This isn't about politics for me. I'm not fighting for the billionaire class, and I'm certainly not one of them. What I am is someone who understands basic math, economics, and business, who has watched what happens when states push tax policy past the breaking point. Here's what's on the table right now. A proposal to reduce New York's estate tax exemption from 7.1 million down to 750,000, an 89% cut while increasing the top rate from 16% all the way to 50%. This is embedded within a batch of revenue ideas sent up to Albany to try to plug a $5.4 billion hole in the city budget. I want to discuss who this estate tax actually hits, because it's certainly not the ultra rich. The ultra rich weren't exempt, as only the first 7.1 million avoided estate taxes. A 750,000 threshold in the New York metro area is not reasonable. The median home price in New York City hit roughly 809,000. In Nassau County, you're looking at 820,000. Suffolk County sits around 675,000. Westchester is 754,000. If you bought a house in the city, Nassau, or Westchester, and you spent 30 years paying off that mortgage like a responsible adult, congratulations. You are now above the estate tax threshold. What's even better is that you hit the threshold before even factoring in your 401k, life insurance, savings, a family business, or other investments. This isn't a tax on the wealthy. It's a tax on a retired couple in Bayside who paid off their split level. It's a tax on the family that runs a deli in Astoria and owns the building. When you force those families to come up with 50% of the value above 750,000 after someone dies, what do you think happens? They sell. They liquidate. The house goes, the business goes, and the generational wealth that took a lifetime to build disappears in a single tax event. Family businesses, which are the backbone of employment in neighborhoods all over the city, get gutted. According to the State Department of Taxation and Finance's own numbers, New York's tax structure is incredibly top-heavy, as millionaires paid 44.6% of all personal tax collected in 2024. The top 200,000 filers covered 51.9%. The bottom half of all earners paid 0.2%, not even a percentage, right? At the city level, it's the same story as filers making over $1 million represent less than, good thing I'm reading this out loud. I have a freaking typo.
Yeah.
All right. Think about how fragile this makes us. You don't need a mass exodus. You need a few thousand people to change their mailing address to Palm Beach or Austin, and the budget math falls apart. Here's the part that gets me, though. The biggest victims of tax the rich policies aren't the rich. The rich utilize their resources and leave once they have had enough because their resources make them mobile. The people who get crushed are the ones who stay, such as teachers, firefighters, nurses, the small business owner. They can't simply pick up and go. The harsh reality is that when the wealthy leave and the tax base shrinks, the city still needs the same amount of money to run the subways, pay the cops, keep the lights on. So where does it come from? It comes from everyone that are left behind. Sorry, something's in my eye. It comes from everyone left behind as they were forced to pay higher taxes and higher fees. What may bother me more is the double taxation piece. The money in someone's estate didn't just appear from thin air. They earned it and paid income tax. They invested it and paid capital gains. They bought property with it and paid property taxes every single year. They bought things and paid sales tax. Every dollar in that estate has already been taxed multiple times over the course of a lifetime. Now when they die, the state wants to take half of everything above 750,000. At what point does it stop being a tax and start being confiscation? That's a genuine question I have, because if you work your whole life, play by every rule, and pay every tax along the way, and the government still takes half when you die, what exactly is the point of saving, if any? A 750,000 threshold doesn't catch billionaires. It catches the middle class. It catches people who were never wealthy. They were just disciplined. They bought a house. They didn't sell it. They put money away for retirement, and they wanted to leave something for their kids. Punishing that with a 50% tax rate sends a very specific message. The state believes your assets belong to it first and your family second. I don't care where you fall politically, that should bother you. I'll say this very simply. When you tax people to the point where they feel triggered, they leave. When they leave, the burden falls on everyone who can't. When that burden gets heavy enough, more people figure out a way to go. That's not a theory. That's exactly what IRS data and census numbers have been showing us for the past half a decade. New York is standing at the fork in the road right now. One direction is more punitive taxation with an increasing dependence on a shrinking pool of high earners who increasingly have one foot out the door. The other direction is putting forward competitive tax policy, fiscal discipline, and creating an environment where building wealth and creating jobs isn't treated like something the government needs to punish. I know which path leads somewhere good. I just hope the people making the decisions figure it out before there's nobody left to tax. Is that political by any means?
No, post it.
Right. It's not political, right? I'm not
No,
crazy.
it's really not. I mean, you'll be accused of that, but you can say just common sense things that are just factual and be could called political. So, but no, I think it's a good piece. I would go ahead and post it. I don't see anything wrong with that at all. Beyond New York City, beyond taxes, we already talked SoFi too. Palantir AIPCon 9 was this week. Did you see anything related to Palantir, Steve?
I was planning on watching Amit stuff over the weekend. I haven't had a chance. I was actually busy today researching this.
Yeah, no,
I saw it and I was like, Jesus Christ, like what the hell is going on?
Dude, with Palantir or with this? Probably both.
No, with this. I mean, this is
okay.
This is horrible. I mean, I don't want to spend a lot of time on it, but it's not just a New York thing. Like everybody should be angry that we are seriously looking at this, because at some point, don't think that this can't go into other states. Now, maybe it will never get to Texas, but this could certainly get to Connecticut. This could certainly get to other states. And this is just not good.
Yeah. Yeah, it's not, and it can impact others. It can also be to the benefit of other states temporarily as there's capital flight from New York. There's a lot of weird things. Like we saw in February, a moratorium on data centers and a lot of pushback of an investment there. And I'm like, this is the same thing that actually killed Amazon from coming into New York. It's like, if you want jobs, can you just afford to say no to everything and just tax the middle class? I don't know. But anything else to share on SoFi or New York? Do you want to talk Palantir here, or do you want to save that for the after hours? And
I think Palantir is freaking one of the most incredible companies I've ever seen. And they prove it every other day, it feels like, with all these new damn deals that they have coming out. It's incredible.
Yeah, it is. We're at the point now with Palantir, like we have deal fatigue and mention fatigue as bulls, because they do so much you can just lose track. Like so AIPCon is always not announced publicly until like basically the day of, just because of protesters and stuff. But sadly, it came out on the day that I was defending my dissertation, so I had like zero time for it other than just some headlines at the very front of the day. So if you throw this up real quick, Steve, they announced 5 different deal type of announcements at the very start of the day yesterday. This, by the way, follows on a couple of things. So one is at the start of this year, for the first 2 months, 3 different deals that they announced were for the $1 billion amount, which is insane. Like even for Palantir, that's a meaningful amount of revenue. Now, some of that is expansion on existing contracts, but still, it's really impressive. Maven Smart System had a demo. Like we showed and looked at that like 1.5 minute, 2 minute thing that was happening there. And they mentioned basically that they are expanding that across the board, across the entire department. So that's growing rapidly. Then all of these deals. So an expansion with GE Aerospace, specifically a partnership for military aircraft. They were already working with GE, but we've seen this time and time again with Palantir, and this is why their net dollar retention is at 139%. They partner with these guys for limited use, limited contract, and then like, oh, this is so good, we need more Palantir. And so again, this is an expansion here, technically in the commercial side, but it does fit into the government side as well. Another partnership with NVIDIA for AI OS architecture. which they detail all over the place here. And a partnership expansion with LG Group, which I thought was really interesting too. Looking at this is the second Southeast Asia. These guys are located in South Korea, a massive, massive company. But they had earlier in the year in January, HD Hyundai, which went from partnering on very specific project for Palantir several years ago to building an entire platform, Ship OS, to partnering with them across all of their enterprises. And they're the 10th largest company in South Korea. LG is doing something similar as well. These guys, like, there's very little that they can't do. Partnership also with Ondas and Worldview for drones. If you look at the presentation there, it's a little bit scary. Worldview actually presented it, but it's really impressive what they're able to do as far as controlling a swarm of drones instead of just individual drones, which is like, it's scary, but it's also really cool too at the same time. And then this one was really interesting too. So at a partnership with LEU, which expands on their existing contract. So these guys, they do uranium processing. They're the only one that they operate on this side in the United States, the only domestic refinery of uranium. Of course, with what's happening in the space, they're looking to expand quite a bit. They onboarded Palantir, and in the first since January, in the first like 2.5 months of owning Palantir and using Palantir, they've discovered up to $300 million in savings. That doesn't mean they've saved $300 million, but they found so many inefficiencies across the board. And like time and time again, Palantir just demonstrates tremendous ROI to the extent that they're like, hey, I know it's just been 2.5 months, but we're going to expand our use of Palantir across our entire enterprise. Again, just because the ROI is immense. And this is not all of what they announced on that day. And even like previous to this week, there was earlier in the week, there was a number of things that they announced too. So this is just like, it's pricey, it's expensive. But man, I wish Michael Burry, I wish the Bears were right and Palantir would just fall to like $45 a share and I would just own Palantir. I don't know that I would own any other shares of anything else at that point.
What was the share price you just said? I want to make sure I heard you correctly.
45.
If Palantir went to 45 again, and it was just on sheer the market falling and nothing in the business case changed, and they still had the same projections, I would sell everything I have and put it.
Yeah.
There's no question about it.
That's a caveat. Yeah, you're right. Like if Alex Cart, quit and Shyam Sankar quit for whatever reason, and like obviously, but same company, nothing has changed. $45, like it will still by some measures not look cheap. Well, you have to figure in those 70% growth, so it's still actually that does look pretty cheap there. But yeah, it's not going to happen. But if it did, oh man, I would load the boat. I would actually at that point even consider taking on some margin. Just what I could sustain with the cash that we have that's not invested.
I don't know that I would do that, but I would seriously sell pretty much everything and buy just Palantir at that point.
Yeah. And I do see your question, EPG Glass. I don't have any cash right now. Like if you put the amount of cash that I have across all 4 of my portfolios, it's maybe $1,000. So I have cash coming in every 2 weeks, which is nice. And so I'm buying with that. I also have cash every week because I do sell options, but yeah, it's not a meaningful amount. Any big buy that I have to sell something at this point, and I only have 2 kidneys.
I almost started a position in Reddit today, but I didn't. I want to see what happens next week. If they don't announce something over the weekend, I think the markets are going to fall next week again. I am getting more interested in Reddit, and the premiums are so nice on the options that I'm considering that being the new one. We'll see.
What's the play there? Is it more about that's where humans and human eyeballs are, so they're valuable in terms of advertising and also as a source of content for AI or something?
I don't understand the company. I don't know why anybody uses Reddit. I don't use Reddit, but the numbers are incredible. And the valuation is incredible right now. So it's down roughly 50%. And it's trading at 32 times this year's earnings with 57% expected EPS growth this year. Next year, 40% EPS growth, trading at just 23 times. And revenue growth this year is supposed to be 43%, next year over 30%. So this is something that I think can rebound. And the way I was thinking about was, if I buy it here and sell 140 calls for next week, I was going to, at the premium, it was about 2.6, 2.7% option premium in a week. And I mean, if it moved, that was another 4.5%, 5% on the equity. So I was like, maybe I just buy it and just write weekly cover calls until it gets called away.
All right. Yeah. The numbers do look good. I did look at Reddit last week. I've not kept up with the stock price action. I'm sure it was probably not strong this week, like most companies that were in that bucket. But yeah, it's hard right now. Like, I'm limited in cash. There's a lot of really good opportunities there, some of which we talked about tonight. Palantir, the thing is, like, Palantir in the 150s in this context, it makes way more sense in my mind to be investing elsewhere. I am still slowly buying and adding to Palantir, but yeah, Reddit. If like Reddit was the only thing that had fallen, everything else was still held up, I think a lot of people would be buying it. I'd have to think about it.
Palantir is an amazing company. If we get the opportunity, I think it's worth it. It's that good.
Yeah, there's no other company that I own that I would go 100% all in on. Not even maybe Nvidia. Probably not Nvidia though, because there's the geopolitical risk of the invasion of Taiwan. Even though they've made some moves away from that, so yeah, it's just Palantir, honestly, and I can't do it here, obviously. Is there any other company that you own that, I mean, like, honestly, any company could be that. Like, if Nvidia was trading at $1 a share, yeah, I'd be 100% Nvidia. SoFi at 50 cents a share, nothing else has changed. I mean, like, yes, but like any like realistic price where you'd be like, okay, I have to go 100% in. Is there a company that you would be able to sleep at night with that? Amazon?
Amazon is probably it. Amazon, Microsoft.
Yeah.
Meta. I mean, you talk about going all in on something, which I would never do. It's got to have to be something that has such staying power that I would be able to sleep at night. And I don't see corporations getting off of Microsoft. I don't see consumers getting off of Amazon. I don't see consumers getting off of social media. So I would even throw Alphabet in there too. I mean, while I think Nvidia is cheaper, at some point it's going to be a boom bust cycle. I just don't think that happens for a couple of years. But staying power, those four are the ones.
So not all in on Costco?
I've been wrong on Costco.
Yeah, not so much. All right. Are we ready to pivot to after hours today, Steve?
Yeah, it's about 10. Why don't we do another 10 minutes here and then we go to after hours?
Sure. What else do you want to hit on?
Let's hit on where we think the oil crisis is going to go. How long do we think this gets played out? And I'll tell you, the more that I look at this, the more I feel like this is not ending for a month. And while I originally said it was going to end at the beginning of this week, I think it lasts because Trump's going to be in Beijing for 3 days. I think that this is just not a ploy, but a lot of this could be to a multifaceted thing. Look, we don't have the information that they have, okay? But it's not hard to believe that you would want to have leverage going into a very high stakes negotiation, and China imports 90% of its energy. This is creating a problem for China. We have a summit with China for 3 days in a month. I don't know. Something there, I think.
Yeah, I have always thought it was going to last longer than was expected. I also thought Venezuela would too. So, I mean, I get it wrong all the time. So on this especially, but like this whole channel is not financial advice. So as we said at the beginning, but That's a hard thing. Like there are still things that Iran can do to make it very difficult to traverse through the Strait of Hormuz. And also with some of the regional folks that are out there, like Qatar ended up shutting down their LNG fields. And it's not just their current refineries, which account for 25% of the LNG, 30% of the helium around the world. Like these are real pain points, but they also halt future projects for the time being. So it's tough to see this end extremely quickly. I do think that we end it before the end of the year. I hope that there's no boots on the ground. There shouldn't be. I think that there's enough other impacts in the Middle East and North Africa region that there will be some sort of peace agreement made at some point, but it's probably going to be quite a bit longer. So it's one of the reasons why, like, I've not sold any VG at all. I didn't buy VG as a hedge for my portfolio. I bought it as a long-term investment. I was like, hey, it should not be trading at, actually it was high fives at one point. I bought a little bit there, but I bought from the $8 range and down, and that's worked out really well. It's in the 13s, but I've not trimmed just because I'm like, this thing can last longer and cause a lot of pain for a lot of companies. And it's really nice to see some pretty strong green on days when the rest of the market is just bleeding red. At some point, I will take some gains, especially in the leaps that I have for VG. Yeah, I would be surprised. I wouldn't be surprised if this persists longer than the next 3 months.
I hope you're right. Trump just sent 5,000 troops to the Middle East.
Are you kidding me? Oh, well, not to
Now,
Iran, right?
not Iran, the Middle East.
Yeah.
So
yeah. That's fine. I don't want to see guys go in and lose their lives over Iran already. Yeah.
No, I don't want to see any service members. I don't want to see bloodshed. But
I hope that I'm wrong. I hope that this ends next week. That would be great. And that it's settled, not just something that happens again in 3 or 4 years. But I'm very skeptical of that.
You ready for this?
Yeah.
Robert De Niro says he now has no choice but to leave New York City. According to De Niro, the Niro administration wants to take nearly half of his savings simply because he's considered wealthy. I haven't worked in some time. My savings are all I have, he said. Social media didn't miss the moment. Many are saying he's officially entered the F around and find out phase. I'm telling you, this is not going to be good. Some of these comments, I mean, I love this comment. So the post that I put out, somebody wrote to me, people have repeated claims of leaving NYC forever. Most never leave because the population is so big and business opportunities are very unique. Worrying about an estate tax is a waste of time. You should be worrying about AI and mass unemployment. Yeah, those are risks too. Like these are all risks. But the estate tax will cripple New York. Cripple it.
You know what we'll see next, Steve? If there is capital flight, it's almost always the next thing for states like this. It's going to be an exit tax. You leave New York, fine. We're going to tax you on your way out too.
Yeah.
And that actually, ironically, now, I've not studied every single one of these, but I did look at some where that has been done. It actually leads to an acceleration of people leaving. It never does what they think. At least I have not seen it actually stop the exit.
Yeah, we'll see. Well, you want to go to the after hours? Or we'll throw an invite to somebody who's in the chat. So if you know who you are, look at WhatsApp.
All right. Sounds good. Yeah. Put the link there in the private chat for me. We'll be live in about 5 minutes or so, guys. This is for members only. If you're a member of Steve's channel or my channel, we thank you for your support, and you can just click on there and enjoy it live. It will also be recorded, so if you don't have the time, you can check it out later here in a moment too. But as always, thank you guys for being here live with us. You're the reason why this show is a lot of fun, interacting with you guys, seeing your questions and comments along the way.
Thank you, everyone. Appreciate it. We will see you in a few minutes. Roy, do not hit the wrong button.
All right.